Hey everybody, so I've been doing some videos on TikTok on Fibonacci retracements, which people love to fight about in the comments. I know some people say it's bro science or pseudoscience, doesn't really work, it's bullshit. Whatever. If that's how you feel, you don't have to use these. If you would like to know how to set up potential price targets or sell targets if a stock is in a downtrend, I'm going to walk you through. I'm going to try to be brief with this because it can get very complicated. I'm just going to go over some of the basics on these Fibonacci retracements and how to use them in coordination with other bits of technical analysis. You never just want to use the one. So you can use Fibonacci retracements in downtrends or in uptrends. I'm going to walk you through both examples. First of all, let's say we're keeping an eye on the stock. It's Pixelworks. Obviously, don't buy it just because I'm doing a video on it, but if you want to put it on your list, sorry, it is allergy season here in DC and my windows are open. Just probably just close them. Don't mind me scratching my nose throughout the entirety of this video. You notice that the stock is in a downtrend. You want to open a position. You want to start a position. Start, by saying start, I mean adding a little bit at a time. But you notice that it's in this very heavy downtrend, and you don't want to buy this stock until you get some sort of indicator that the trend might be reversing. And you get it right here when the stock enters oversold position. Now, just because it enters oversold doesn't mean that it's a guarantee that it's going to turn around. You can see that a stock can stay in oversold territory for quite a while, sometimes days. But this is a good indicator that the trend might be reversing. Now, you don't want to just buy the stock because it's bottomed out. You want some sort of indicator that it's either consolidating, so trading sideways for a couple days, or an uptrend, which we get kind of right around here. So let's say you're willing to take a chance on a little bit and open a position here, and you buy it at $2.80, and you start your position with 1,000 shares. You buy 1,000 shares right here at $2.80 because it's reversing a little bit. It's come off this oversold. And you're just going to start your position. You don't want to go all in because if the selling pressure continues, you want some reserve capital to buy a little bit more and to average down. The reason I would say it's probably okay to consider starting a position here is because of this massive sell-off. Everyone's watching from 386 to 264. It's a huge sell-off. Because we've had this humongous sell-off, and we've entered oversold territory, it seems like the stock might be reversing. So you could start a small position. I never say go all in. Just start a small position and wait for more indicators to confirm the trend. One of those would be crossing over this psychological 20-day moving average. It's a psychological indicator. When the stock crosses over, it means that a reversal could be happening, which we get here. So now you're really intrigued and you're getting ready to make your next investment, your next scale in with your last 1,000 shares, which you do right here when the stock crosses the 50-day moving average, which is this light green line, and we have a big surge in volume, and we have a breakout to the upside. So with all of those indicators, right, the breakout, the 50-day, over the 20-day moving average, the big surge in volume, this is where we go in with our next 1,000 shares. Now, you might be saying, hey, why didn't you just buy your whole position at 264? Then your profit would be, because you don't know. And a lot of people are going to come out on YouTube and on TikTok, and they're going to do videos like this, and they're going to go, in hindsight, of course, they're going to say, I bought exactly at the low because I'm the genius, and I sold at exactly the high point over here, and I made an unbelievable, but you don't know that. And that's why I say start scaling in and waiting for the real signs to get in. Otherwise, you're really just risking your money. You want some sort of indicator that you're still guessing, right? You're still making a guess. It's just more of an educated guess than just a random, here sounds good. So we now have 2,000 shares at an average price of $2.90. The way you figure that out is you take, so we bought at $2.80 in this hypothetical scenario, so that's $2,800. And we bought our next 1,000 at $3, so that's $3,000. So the math, it's $5,800. That's how much money we've invested, $5,800 in this trade, divided by 2,000, because that's how many shares that we have. So we end up with $2.90. That's our average price, $2.90. Now what we do, because we have come off the lows, is we go up to the previous high because we were in a downtrend, and now it looks like we're reversing. So you right-click, add drawing, and you go down to this percentage tool, which says Fibonacci Retracements. You connect your high to your low, And now you've got potential resistance lines, aka sell targets, where you might consider selling your position. Now we're down here, we're at 290. So what we want to see is either it holds support, which you can see it's holding support pretty well at this 23.6 Fibonacci retracement level. All that matters really though is that it's holding support. The next thing we want to look for are some indicators. We get 3 breakouts. That's a good sign. We also have an uptick in volume. Although not as big as what we saw back here, it still is an uptick in volume. We saw another uptick in volume here where the stock moved from 286 to 326. That's a significant move, and it's only on this little teeny volume compared to this stuff over here, which was a huge run up. We're still happy with this volume. Look at that. That's a big run up. So we get more of them. We get multiple breakouts. And what we get is it crosses over this next resistance line, which is the 38.2 level at $3.10. Now, here's the thing. You don't have to sell your entire position. You can scale in, buying a little here and a little higher up, but you can also scale out, selling a little here and a little here, and maybe holding out and YOLOing the rest. If you follow Wendio on TikTok, she calls it a moon bag. That's a crypto term. In stocks, you say playing with the house's money. Just keeping a little bit in. You've taken out all your profit. You've taken out the majority of your investment or your money that you've traded with, but you're holding on to a little. So you've got options here. A lot of people say, I sold everything and then it went up. Well, you don't have to sell everything. There's no law that says that you have to sell the entire position. You scaled in, you can also scale out. So you have these various price targets here. Now, obviously, 386, fingers crossed, good luck, buddy. It's probably not going to get there, at least in any sort of reasonable time frame. It also depends on who you are as a trader. If I am a full-time stock trader and I've got bills to pay, and this is my only source of income, I'm taking the majority of my gains, maybe even all of them, if they're significant, because I've got bills to pay. If I have a full-time job where I work in an office and I get a salary and I'm doing this kind of on my cell phone for fun and taking in a little extra income, then maybe I have more time and maybe I have a little bit more risk tolerance. I can hold out for a little bit of a higher run. And you can set alerts to stuff. You can say, hey, if it crosses this line, so literally all you do is you would right click on any of these resistance lines that you want, and they are support and resistance. They work both ways. But you would click on this line, right click, and you would go down to create alert withdrawing, and you would say, when it crosses above this retracement, alert me. So now you can see that it's turned orange here. So when you're at your office and you're in some sort of meeting or whatever, your phone's going to buzz and it's going to say, hey, your stock has just hit your price target. Here's your alert. And literally all you have to do is what anyone does in these situations, at work. I don't know because I don't work in an office, but you just go hey, I got to go to the bathroom. And you grab your phone, you run to the bathroom, and you take a look in real time. And what you want to look for is, how's the volume look? If the volume looks really, really strong, maybe you hold off. And you say, hey, we crossed 325. We might be able to get to 340. Every time you cross one of these resistance lines and there's a surge in volume, it just gives you more hope that the stock could rally to its next resistance target or price target. So what you do is you check and you go, oh man, look at this. The volume is completely slowed. We're almost at overbought position or overbought territory right now. And we've just crossed, but it looks like we're selling off here. I'm gonna sell my position. Maybe you're gonna sell it at 329 or 328. So let's do a little bit of math here. Let's do a little bit of math. We sell at 328. We were in at 290. So that's 38-cent gain. And if you wanted to sell the whole position, that's 2,000. That's your profit, 760. If you wanted to sell half, you could sell half. It's completely up to you. As a full-time self-employed stock trader with no other source of income, I'm probably selling here, and I'm taking my $760 and I'm walking. If it dips to previous support and then it holds, as you can see here, it's holding on these levels and it's also holding on these levels. So, oh, see, look at that. Alert, alert, it just crossed your thing. So, and then you can see, look, in real time, my alert went away because it hit my target. So that's how it works. If the stock sells off and holds, hovers on the support line but doesn't go below, this is another potential buying opportunity for me to get back in on the way up. Now, here's how this can also work on the way down for potential stop losses. So what I'm going to do is I'm going to right click and I'm going to hit remove drawing. And now that we're in an uptrend and I want to know, hey, where should I potentially sell if it starts to go down? I right click on the low, add drawing, I go back to the retracements and I connect the most recent low to the most recent high, which is here. And these are all of my sell targets now. It crosses over. Now, if it can hold on this support line, great. If it crosses, where could it potentially go? In theory, based on previous momentum and volatility and stuff like that, it could get to 308, it could get to 3, it could get to 292, and worst case scenario, it could get to 265 because that's its lowest, most recent price. So we've got now our sell targets here if it starts to go down. So we just went through where to sell if it's in a bull run, where our potential price targets would be to take profit. These are our potential loss targets. So you always have to think about what your risk tolerance is, how much you're willing to risk on a trade, where you want to cut. Do you want to lose 3%, 5%, 7%, 10%? How much money do you want to lose? These are your support lines. And so just like in the opposite, in the previous one, it's bugging me here today. When you break a resistance line, it's an indicator that it could go higher. When it breaks a support line, it's an indicator that it could go lower. And where could it go? To its previous level, previous level, previous level. So again, it's up to you how much you're willing to risk on this trade. Since we're in at 290, you could get out at any one of these and still be profitable. Even I guess kind of here at 292, although your profit wouldn't be much. And anything under this line, now we're heading into an actual loss. So you can still preserve your Whoa! You can still preserve your capital if the selling starts to kick off and make some money, although it would be less. Or you can hold out and say, well, I'm going to hold out and I'm going to let it get here and see if it holds support. And if it breaks this support, then I'll sell. So you've got lots of choices. That's just a basic guide to the Fibonacci retracement. I hope you thought it was helpful. If you did, please hit the subscribe, please hit the bell. Thanks for watching and have a good day.